G'day, welcome to another Closing Bell. You're here with myself, Charlie Ullman for Fat Tail Investment Research, and I'm joined here by Murray Dawes, the Chief Trader. How are you today, Murray?
I'm very well. How are you doing, mate?
Not too bad, not too bad.
Hello to everyone.
Yeah. So we've got a little bit on today. We're going to be talking about oil prices are probably the main story for today. It's been a big drop there. Also briefly touch on the shutdown in the US and a couple of movements around the ASX. But I think for us, we've been talking about the shutdown in the back office with a few people. The market's really looking past it at the moment.
Oh, I've seen a few of these things before. Yeah. It's all a bit of a political argy-bargy, and I don't think the whole of the US government is going to shut down forever.
No.
Maybe they're using it as a tool to start forcing some things, and maybe the Democrats will back off. It's all just a big game, and it's like the debt ceiling. Like when everyone goes, oh, the debt ceiling, oh, they're going to stop the debt ceiling. It's like, oh, okay. And then they have a fight, and then they raise the debt ceiling, and then they borrow more. So it's all a bit of a joke, and I just don't care about it.
From what I've seen, it's like for every week that they're in shutdown, it costs the market or the US about $7 to $15 billion in GDP. So it's a fair crack onto it, but
it's loose change.
It's loose change for them in the long scheme of things. So S&P 500's at new all-time highs, Nasdaq is at the all-time highs. So everyone's kind of looking past it. So it's not really the news for this week. I think the big news we've been talking about is oil prices. Oil prices have seen a huge plunge. The steepest plunge in over 3 months. So we've got Brent crude down to $64 a barrel. That's a 6.4% drop in a week. And WTI, the West Texas, is down 7.6%. So there's some brutal moves down there.
And what's backing up? What's the reason for that?
Well, there's a few things, but I think the big news that we've been hearing was that Reuters report that the OPEC meeting that's coming up this Sunday or Sunday US time, they're talking about maybe 500,000 new barrels coming on. That's the top end of the market, the top of their estimates, but that's kind of what everyone's freaking out about. I've heard reports saying it's more likely going to be, maybe a fifth of that. But I think the grand story is, demand might be weak. They're worried about global, growth. And at the same time, Riyadh is wanting to get some supply out there. So it's interesting.
Yes, or America is trying to force it down to put pressure on Russia.
Mm-hmm.
There's all those geopolitical angles.
Last night
they would love to crash the oil price and have Russia squirming in their seat.
I was going to say last night, the G7 just signed a new round of, what do they call them? It's not a proper sanction. They're going to do sanctions on the traders, mainly India, the people that are trading the Ural Russian oils. So looks like they're trying to put more pressure on them to stop the war, but it's much of a muchness.
And also, as the oil price goes down, the OPEC producers who are funding their governments and etc. through oil prices, they're a cartel, but also they're individuals.
Yeah.
And the temptation for individual countries to, if their revenue's going down, to pump more oil to try to keep their revenues up, goes up. So the cheating within OPEC naturally goes up because they're like, well, I'm losing money here. I may as well create more volume so I can actually get something out.
Yeah.
So you have those sort of pressures start to come in, and all of a sudden you've got an oversupplied market.
Yeah.
And if they're doing this into an oversupplied market, we could be on the edge of a really big fall. And I'll show you now the charts. I'm going to go into a big picture view of oil prices so people can get a sense of why the setup at the moment is quite unique and is also pointing to possibly a really sharp and big fall in oil prices.
Yeah.
So I'll get stuck into it just so people can see what's going on. And I did a chart of the day if people are on Fat Tail Daily, and if you're not, sign up. See below the video. If you're on YouTube, click on and sign up to the Fat Tail Daily, because every week I do a couple of charts looking at different things that I find interesting. And at the start of this week, I looked at oil.
Yeah, you've been talking about oil for a month
for a long time.
You've been calling this since like 80.
Yeah. I've been saying, watch out, don't buy it yet. It's not ready. So it's all sort of playing out as expected, that the trend is still going. But the setup is now there that it's like saying, flashing red, that another few bad nights, and all of a sudden it could be on the edge of plummeting in a straight line. And I'll explain why. So we have here oil prices going back. This is Brent crude going back to 1999, right? So we're going very big picture on this. So here we have the rally, and this is what I'm doing all my calculations off. So we have the move from 2000 up into the crash. So we had that massive run up to near $150. So that's the wave that I'm looking at, this massive rally. as really everything that's come since has all been within that range. So then when I'm looking at a range like that, I'm looking at the point of control as like a gravitational point around which the market oscillates. So you're thinking of that as some gravitational point. So that midpoint is very important as far as what the market's doing. You want to know where it is in relation to that midpoint. And also you've got the buy and sell zones. So we've got the 75 to 87% retracement down here, right, all the way along. And then we've got the other side of that, which is 12.5% to 25%. So that's your buy and sell zones where there's just a higher probability that prices will reverse in that area and then move back to the point of control, back to that midpoint. So we can see since, over the past 20 years, the amount of times that it's bounced out of that buy zone back to the point of control. And this is how you see it, as these moves from the buy zone to that gravitational point, and then rotating out the other side to see what's there. What happened there? Lots of work done, but found massive resistance in that sell zone, eventually fell over, and once it plummeted through the point of control, you're then creating targets back to where? Back to the buy zone. So we've had lots of work done there in the buy zone. Where did it go when it rallied? To the point of control. So it couldn't get through the point of control in that time, had another wave to the downside. What did it do? Right down into that buy zone, looked absolutely terrible. That's where it found the reversal. You see following the trends as well. See the orange line being the 10-month exponential, the blue the 20-month simple. So that's just my sort of long-term trends based on the moving averages. So you can see bouncing out of the buy zone, long-term trend shift, up it goes through to the point of control. But this time it actually managed to break out. And when it breaks out, where's your target? Up to the sell zone. So here was the rally a few years ago, up into the sell zone again. Couldn't do it yet again. Where did it go? Back to the point of control. So this is where it gets interesting. So now it's been really struggling to hold this point of control for the last few years, right? But if we look at the trends, right, it turned down into a long-term downtrend there. And that's never changed since, has it? So since then, it's been a long-term downtrend. And that's when I've been saying every time it's rallied, just wait, let's see what happens here. Because what happens is you get the mean reversion event, which is the move back to the moving averages, so the long-term moving averages. It's like almost testing what's there, It's trending down, it's trying to rally, it gets to the major moving averages, and then the market, if the selling's there, it's like, oh, watch out. And then you get the next leg down in the downtrend. So that's really what's been going on. Lots of mean reversion back to those long-term moving averages, but the long-term downtrend remains. And it's also now holding below the low of that whole structure from the last few years. We had that low around $60, at the start of the year. So this is where that's now a really strong line in the sand, because we know now that it's really failed below this point of control, and if it goes below that low, there's nothing. There's no support.
Right, yeah.
That's basically going straight to there. So that's when you're going to get that real extension and quite panicky selling. So it's set up beautifully for that. And I just want to go into the shorter term so people can see what's really going on. So you can see, if we just look at the wave structure again, this is pretty clear. It's just been going, and it's got some internal waves there. But what I want to show you by doing this is just the fact of the lower highs and lower lows with this. So all the way along, and this is what I've been saying through this whole period, is until we see the moves back above the most recent high in the trend, you've got to be a bit wary. So for me, that's up above $83. So I can't really get super bullish until it gets above there, for starters, or that long-term trend shift happens. And none of that's happening yet. So we've still got this constant pressure still there. The trend is clearly down, lower highs, lower lows. And here we are. It's been rejected once again from that $80 level. And people can read my stuff then when it was up there saying, watch out, this is where it can fall over from, because it was in the sell zone of that most recent wave. And now we have it back below the moving averages, starting to head towards and only a few dollars away from this $59 level. So, and that could be there next week, right? It could. Now, it may not break below it, fine. But if it does, the setup is now there for this thing to completely surprise the market with how brutal the move could be.
So you think sub 59, watch out below kind of thing?
This is now set up, poised, where it's failed. See how that last rally that it had, this rally there, see how it went and retested that point of control? So it went and retested what is the major, it retested the sell zone of the downtrend that's happening. It retested a 25-year point of control, and it hit there, it retested the moving averages, and it hit there, and it's just gone bang. So it's saying, okay, the selling pressure's still there. So now it's going to test to the downside. What happens under here? Where's the support? What support would there be? And that's when you're going to just see it go bang. And so that's like mid-40s for starters, and who knows. So that's the setup that we've got, and I'm quite excited by that, because if we look at what's happened in the past, what has happened in the past over and over again? It's gotten down into this area, and once it's turned up, there's the long-term uptrend. There's the long-term uptrend. You know, that's some pretty good opportunities, isn't it?
Yeah, I mean, if we zoom out, if you think about this, this is a very macro look at the market here, right? Like any of these downtrends were generally big downturns in the market. Then liquidity came back. You know, the interest rates were cut or something like that. You know, that for example, the 2010s to 2014, that was a terrible period for gold, right? And Aussie, right? And if you look at the gold oil ratio, that's a big thing.
Yeah,
and what's happening
absolutely.
Right now, the juniors are making bank in the
because
Australian
and if we do see that crash in oil prices, the gold oil ratio again is going to be flying. So the margin expansion for the gold producers going up even further. So we could be on the cusp of an even bigger rally in all these gold stocks.
Yeah.
So all of that plays into it as well. And ultimately, long term, we know that no one's really searching for oil, and it's all on the nose, and everyone thinks it's bad, but it's still needed, and it's not something that you can just, and we know EV sales haven't been that great in a lot of areas. There's certainly not a big take up happening. In the US, they're actually pulling back from subsidies and etc. So need for oil still there. Investment in oil not happening because they thought it was going to be gone. So we could be at a massive inflection point coming where it's all oversupplied, all bad, and then people start looking 5 years ahead and they go, we haven't really got fields coming online. We haven't got... And we actually do need it still. What's that demand-supply balance going to look like in 3-5 years? It may be terrible. And we may be in for something like this, where it gets hammered, finds the buying support, and then goes bang. So that could be our future. And that would all make sense based on this very long-term structure. So I see this sell-off as potentially setting up conditions for the serious buying opportunity for a market that could be way out of balance in future.
Yeah. I mean, there's a few stocks that I can't mention because they're in various people's portfolios, but I've noticed through some of the smaller ASX exploration, oil and gas exploration companies, that a lot of them have kind of seen that trough already occur in the last 4 or 5 months, and they're all starting to turn up as well. So it kind of comes with the cycle of that.
Yeah, so I haven't been looking at oil and gas at all because of that chart, and I've been saying for the last few years, I'm just not going near it until I get signs that it's time to go. And it's been the right thing to just trust the chart and let it play out. You know.
Yeah. Interesting. All right. Well, the other big news this week was obviously China blocking BHP iron ore sales. You hear about this? Big move. Yeah. So do you think it's just more than a short-term sales tactic, or do you think it's something that
can they get rid of BHP in their stack of no?
Yeah, from what I saw,
what are they going to do?
Yeah, another decade at least of relying on WA Pilbara iron. So
it's a argy-bargy negotiations trying, but China is over a barrel with that, and I really thought their iron ore needs would be going down because of the property problems. And I know that they've had a lot of construction that was already going before the downturn hit. So that still needed to get built out. So you still have demand when you think that the property market's going down, but the iron ore demand's still up, and you're going, what's going on? It's like, no, they've still got a massive build out that they're doing and that they need, but then that's going to reach a point, and then does it fall off a cliff?
Yeah.
So that's what I'm wondering.
Our colleague James Cooper did some great research into this, looking at the difference, how if we looked at the market in 2008, from there to now, we've shifted to now 40% of their steel iron ore demands are coming into their manufacturing side. So they've matured a little bit in terms of the market, and it does seem like the Beijing is really interested in trying to get beyond the mega project way of propping up the economy. So it'd be interesting to see in the next 10 years what really happens with that.
As you get more mature, your steel intensity goes down, like a modern economy, like America. They've built the bridges, they've done a lot of that, and then your steel intensity per GDP actually usually goes down the more advanced you become.
Become a service economy, for sure. Yeah, but we also got the Guinea mine of Rio Tinto is coming online in the next, it's meant to be next year, but really ramping up production by 2028, 2029. So that'll be another 120 million tons of iron ore coming onto the market. And then Brazil is finally ramping up after all their crises with the dam. So
I thought iron ore would be down at $90 by now, and it's up at 103 or whatever. So I don't know what it's doing. It's gone sideways for 2 years, So, but it's still trending down. So it's with iron ore, it's a very tricky chart because it's still trending down.
Okay.
It's gone sideways for 2 years. This could all just be a consolidation period before the next leg down, and there's no real signs that it's the bottom and it's time for it to go up. So for me, it's just a step back. I'm not.
No signals there to go.
No real signals to go on.
All right. Okay. Well, I have seen some signals around biotech recently. We had the news yesterday that the Trump taco trade was once again a pretty good trade, with Trump pausing, Lutnick officially pausing the 100% tariffs on foreign biopharmaceuticals. So that's been good news for the Australians. But I mean, a lot of them have looked past it anyway because a lot of them are already.
There's a biotech. Biotechs are moving. So that we've gone through a really bad bear market in biotechs, and really they're a tough, almost like the small miners as far as the risk level, and it takes so long. Clinical trials, you think, this sounds fabulous, and then it takes years and years, and like the osteoarthritis paradigm. You need $100 million. You need to keep raising money. It's years away, and there's a binary point there where it doesn't work and it's worth nothing, or it's worth absolutely billions.
Yeah, they're all
so they're all over the place. They're good trading stocks sometimes, but they can just have the wildest times. And all biotechs have been hammered for years, and Australia has a very good comparative advantage in that space, and we really should be world beaters, and we are. And we've got some very interesting stocks in that space too, and they're starting to run. And what's that code of that Nasdaq Biotech, NBI?
NBI, the Nasdaq Biotech Index. So that's one to look at for the kind of zoomed out picture. But just to hover on that point, it's been a really bad time for, since about February for the biotech, especially because Trump announced, huge cuts in the FDA. So everyone thought, the FDA is going to delay all of our clinical trials. It's going to take forever. But a lot of that hasn't really shaken out. It's been a pretty good time since then.
So. Well, I mean, look at this. It has been a tough time for a few years, because really that's 2022, 2021. So it's looking great there. And in our market really got hammered as well, all the biotechs. And this is now, I mean, you can see there, look at these moves back to the buy zone, buy zone there, and again. So it's all still trending higher, and it's gone, look at that, boom, taking out that high and really rocketing. I mean, this is looking like it wants to do this and take out that all-time high. Like it's a primary trend, basically. You got that move, this one, you got that wave, then this pullback, and now we're into this next wave. So from a biotech point of view, I think they're looking interesting and worth checking out. I mean, just have a look at a few of these that are picking up, that are starting to run. Clarity, that's down to $2, up at $4.62, and looking like it's going to break out and take off. What's some other ones?
What about Race Oncology?
RAC.
What, 240% in a month or something?
Kept an eye on this, and it just
straight up
took off too quickly. But again, you can see same structure that I always look for. Let's have a look at that wave. What do we see? There's your wave. There's your buy zone. Where did it go back to? See that? Point of control. then you got that wave, and then that came back to the buy zone of that wave. Everyone pay attention. So there you've got the move back to the buy zone there, buy signal, bang, off it went. And
Paradigm, you showed Paradigm. That's another classic example.
Is Paradigm coming to alive again though, or is it still?
I mean, it's had a recent run. It's still. You know,
when's the readout on the?
I'm in the wilderness. I'm invested in it.
Yeah. When's the readout on phase 3? Like end of 2026 or 2027 or something like that. But this is one of those ones where, and again, great promise. This is where you can see, really interesting. Go and read about them if you haven't read about them already. Osteoarthritis
for the knees,
of the knee, and repurposing one that was Pentasan, repurposed from animals, and it does great work there. And it does seem to have proof that it actually does heal lesions rather than just being a pain relief or anything like that. So possible market size, absolutely immense, but the cost of the clinical trials, what they've needed to do, absolutely so expensive and years to play out. And that's when you have these biotech stocks that run on, oh wow, this is going to be huge, and then the reality hits, and then the capital raisings hit, and and all of a sudden you're back to here. But really, the reason it ran like this was made sense.
Yeah, it was on the story.
And now we're 5 years down the track and just a couple of years from readout. So if you're thinking of when is it time to buy this sort of stock, it's something like this is what you look for. And what I'm looking at here, and again, I can't go into my strategy here, but it's just sizing up nicely. So you've got this, there's that monthly buy pivot there. And so you're looking at the structures of what's going on there, and I'm not going to go into it more, but it's just interesting. It's just interesting what it's looking like.
Proprietary stuff. Yeah, that's fair enough. For people at home that don't understand fully the point of control, I know you've got a lot of long-term followers. They can just use their trading view, a free one, and just use a Fibonacci to get that kind of general point of control, can't they?
They can adjust.
Yeah,
but it's about the theory of why it happens and what's actually going on, and
exactly. Yeah. But for them to actually understand a wave and they can look at it, they can use a Fibonacci extension to get that midpoint at least. And you can just adjust. So in trading view, this is a Fibonacci, the normal Fibonacci, but I've just readjusted all the settings. Exactly.
So here's the settings for people. So they're my settings.
That's valuable information, folks.
So you can go and look in there and set that up so that you can see all these things. And just to know the theory, it's just that there's areas inside and outside ranges which find support. So I won't go into it here. I'll take up too much time.
No,
but people can keep watching these videos actually, and they'll learn as they go. But just imagine the midpoint as being where all the volume's trading. So if we looked at if there's lots of trading going on in a huge range, just imagine you looked at that as the volume trading at each price. So you had price on the x-axis and volume on the y-axis. It would look like a normal distribution. It would have the midpoint would have the most trading going on, and the edges would have a little bit of trading going on. So most people have their positioning in that midpoint. So then it's going back and shaking you out. And so if it takes off and you think you're in the money and then it comes back to your price, you might get out or you might buy. And so it's almost like a gravitational point. It goes back to where everyone's positioned and ends up shaking them out over time. Everyone gets fatigued, gives up, blah, blah, blah. And then it'll be ready to go on its next wave. So you've got to understand these sort of almost attempts to leave the gravitational pull, and that's where those false breaks happen, where it's trying to get away from that midpoint, the gravitational point, and it can't quite get away, and then it comes back.
Crashes back.
And then it tries to go away and then comes back. So you have that almost like, think about it like a it's being sucked
pulled back to that point.
And then it breaks away, and then it's ready, it's out of balance, it's ready to run again.
What I was going to say, it's really ties into our name, Fat Tail Investment Research, right? It's looking for those edge trades on the distribution of the bell curve, where to get into the right place.
Exactly, to capture the move, the mean reversion. That's what I use, mean reversion, because that's the obvious highest probability outcome is mean reversion, and I just use that to create free call options. Yeah. So that's the theory behind it all.
That's some valuable theory to know.
It is.
Well, I think we should probably end it there. It's a short one because there's not a lot actually going on in the market, and I feel like
it just keeps going up.
And it's going up. That's the story. So we'll leave it there, and we'll go in depth when we need to next time. But thank you all for watching, and have a good week.
See you later.